All right. Good morning, everybody. Welcome to the weekly Forex ritual. I'm your host for today's session, Benny Allen, along with my awesome partner, Mr. Ryan Carthage and Miss Casey Jackson. And we're also happy and grateful for each and every one of you being here with us on this Saturday as we take a look at the technicals and the fundamentals to prepare for this upcoming week. And this week, we are actually going to do a pretty good lesson on the Ichimoku cloud. That's how we're going to spend a lot of our Saturday morning this week. So if you could just turn off any and all distractions, grab a pen and paper for notes, and let's make sure, especially today, that we participate and engage. I think we'll all walk away having learned something really, really new. Become a little bit more comfortable with this big, huge, monstrous indicator that looks so scary when you first look at it, called the Ichimoku cloud. But I think we'll be a lot better after today, hopefully. So with that being said, Ryan, good morning. How are you, sir?
I'm doing well, bro. Glad to be here. Good morning, everybody. How are you, man?
Oh man, I'm doing great. Another awesome Saturday.
Yes, sir.
Yep, always good to get things kicked off with all of our members, especially this morning as we had a lot of questions about this cloud. Ever since we started the inner circle, we get new members, and one of the things a lot of them ask all the time is, what about this Ichimoku cloud? So we're going to take a look at it. We're going to do our best job of simplifying it this morning. So moving forward, some people they like a lot of extra confirmation and things like that. And that cloud is kind of like the one-stop shop. So with that being said, if everybody can hear me loud and clear, go ahead and drop me a one in the chat and let me know that you're ready to go this morning. All right, awesome. Everything's working. All right, so let's just do our best. Hey, if you're not asking a question or making a comment, let's make sure that we do our absolute best to keep our microphones muted out of respect for everyone else. So with that being said, the first thing I want to do is just go over and take a quick look at some of the action that happened on Friday. We know that the UK GDP numbers came out, and for everything, all the turmoil going on, the UK kind of held it together. Okay, kind of held it together. So not a bad GDP report. And then on Friday at 10, we saw a little boost happen. We saw the markets move a little bit, but we've got the preliminary University of Michigan consumer sentiment report that came out. Sometimes we get questions about that. Why is that important? And you can see financial confidence is a leading indicator of consumer spending, right? When people are feeling good, right, they get out here and they spend. If they've got confidence in the economy and they're in that positive mood, they typically tend to spend, which accounts for a majority of overall economic activity. Okay, so the survey is about 500 consumers, which asked respondents to rate their relative level of current and future economic conditions. So it came out ahead of expectations. All right, so hey, these economies continue to be resilient, trying to fight off for as long as they can these recessions that are set to occur around the world, right? So again, maybe we avoid the recession, the hard line impact of a recession in 2022. Maybe it moves down the road to 2023, but we still have some unease out there in the market as a lot of investors still overall in the long term are expecting, right, a recession. So we'll see as we continue to dive into the numbers day after day, week after week. Just a quick check next week because it gets busy, right? So when we come into Monday, like you see here for the euro, you got a French and an Italian bank holiday. Okay, so a little less liquidity flowing in the market, just a little. And then at 9:30 on Monday, we've got the monetary policy meeting minutes coming out. So we'll look at their forward guidance. And that's important because we'll see why here in a few. And then on Tuesday, we've got Canadian CPI coming out. And here we have Australian wage price index. And then for the Reserve Bank of New Zealand, we've got another cash rate statement, and we've got the RBNZ press conference. And then we've got core retail sales coming up on Wednesday. And then we've got FOMC meeting minutes. And then for Australia, right, we've got employment change numbers coming out. Okay, so whereas this week was fairly light, things start to pick up again next week. Last week was one of the, we had some price action, but it was really a slow back and forth week. Last week, the market couldn't necessarily make up his mind. So we'll continue to watch to see what goes on so we can come to trading economics. You see the main story coming out of Friday was U.S. consumer sentiment beats forecast. Okay, so let's move on. Ryan, anything to add that you might have picked up on the fundamental front regarding oil or anything like that as we closed out the week?
The only thing is things are starting to heat up a little bit more in Russia, with Russia and Ukraine. There were some additional bombings near a nuclear plant, and Putin is back on his nuclear threat talk. So there are some special meetings that were scheduled Friday that are going to be held this weekend, that could potentially, depending on how those meetings go and how this continues to intensify, we could see some things, some reactions early in the week. So starting to get a little bit more intense on there.
Awesome. Appreciate the update on that, sir. So we'll continue to watch that and see how that oil price develops as we move into next week. So let's take a quick look before we dive into today's lesson at the US dollar, so we know just where we are. And we see we are still right bouncing around that neckline. Okay, how we closed out. So the dollar is holding pretty tough at that level. So we continue to see if we get a further upside push moving into next week. Maybe it becomes range bound, but it's really hanging pretty strong at this level right now. So looking forward to seeing with some of the fundamentals coming out next week, how the market is going to get back on track and move and flow a little bit more than it did this week. All right. So do me a favor, drop me a 2 in the chat if you've ever used the Ichimoku cloud indicator. Okay, got some folks. Okay, all right, just a couple. All right, no, we got them coming through now. Okay, good. So we're going to talk about that today, because we get a lot of questions about that all the time. You see every once in a while, you see it on one of my charts. It's actually, when it comes to indicators, it's actually, I mean, you can consider the Fibonacci tool an indicator, but it's actually one of my favorite tools to use, especially for those longer term swings. It's kind of like the one-stop shop. So I don't use too many indicators at all. You'll see me check out. You see Ryan check out a stochastic every now and again. Like I said, every once in a while, you'll see me have the template, the Ichimoku template on my screen. But we tend to, we didn't want to use it more on a regular basis at all until, we got some good content out there in regards to, our strategy, how we take a look at the markets, and just having people to learn the power and just overall price action. Okay, having your eyes be first and foremost your number one indicator, because with your own eyes you see things in real time. Okay, so understanding support and resistance and trend lines and developing an overall market bias. Everything else is just kind of icing on the cake after that. So because we've gotten so many questions about it since we've started the inner circle, we definitely decided that we wanted to make sure that we cover it today, and hopefully people are a little bit more comfortable with it in the future. So with that being said, let's talk about the Ichimoku Kinko Hyo, okay, or heel. is the Japanese name for it. Okay, so let me move this into presentation mode and give me like 30 seconds and we'll get started. All right, sorry about that, everybody. I am all set. Okay, Joyce said I'll never be able to pronounce that. Absolutely, and I think a lot of times when people when they hear about it, they look at the name and they look at some of the parts and they're like, well, because of the terminology and everything, they kind of move away from it, and then it just looks confusing, especially in the beginning before you gain a real understanding of it. So let's dive into this Ichimoku cloud. So let's not only just dive into the technical side of it, but let's talk about it from a historical perspective, understanding the philosophy behind it, right? The why, right? We're always big on that in the Forex trade room, helping everybody to understand the why behind the things that we do, or why we look at the charts a certain way, or if it's an indicator, why, right? Why does it work the way it works? How did it come about, and things like that? Because if you understand the why, you can become a lot more comfortable with it, right? Once you gain a better understanding. So the Ichimoku, Kinko Hyo. So first, let's talk about what it means, right? Let's simplify this thing, okay? And when we take a look at it, then we'll better understand exactly what we're looking at and why it was designed the way it was designed. So Ichimoku, okay? So that Japanese term means at a glance, right? It can mean multiple things. At a glance, one eye, okay? So being able to see things at a glance. As a matter of fact, when we do our top-down analysis, and why this is kind of falls in line with what we do and why it's so powerful, is we have you do a top-down, marking your monthly, your weekly, your daily, your 4-hour support, or however low you want to go, support and resistance, because we want you to be able to, in essence, jump on the chart. And if you get on your 1-hour chart, you can, in one shot at a glance, by marking those levels on the top down, know exactly where you are overall, right? So Ichimoku means at a glance, okay? Kinko, right, means equilibrium, okay? So this is really all about, right, where is the equilibrium in the market? Okay, where's that equilibrium? You hear us say that a lot of times, right? Right, where hey, price has found the equilibrium. Okay, that price agreement between the bulls and the bears. Okay, and then heel or hyo is diagram. Okay, so Ichimoku Kinko hyo. Okay, that's what that means simply at a glance, right? Equilibrium, trying to find equilibrium, and it's a diagram, right? A chart. Okay, that's what it is. Simple as that. Okay, as everybody understands that, drop me a 3 in the chat. I'm trying to keep this as simple as possible today. That's it. So when we pop this big thing on here, just keep that in mind, exactly what the name means. Okay, got it? All right. So a little bit of history behind this. Okay, Goichi Hosoda, aka right, his pen name was Ichimoku Sanjin. Okay, so born at 18. Now look at this from a historical perspective and think about the year that we're in right now today. Okay, he was born in 1898 in the Yamaguchi Prefecture. Okay, he's the general manager of a financial newspaper company, and he became a successful trader slash investor. Okay, so it's the kind of the same narrative. Like if you listen to the trading podcast or you read books and you hear the stories of people who became traders, nobody is, for the most part, the majority of people. And Ryan, you can let me know if you agree. And I know you listen to a lot of podcasts and things like that. But the trend seems to be is nobody is born into trading. right? Would you agree? Would you agree with that?
Oh,
Like,
100% facts, man.
yeah, you know, so
100%.
you know what I mean? So it's like, oh, I was a doctor, oh, I was an engineer, oh, I sold real estate, oh, I was a lawyer, you know, and I was working in the factory and we started an investment club and investment group. Like, it's like nobody is just born into this profession. Okay. And let's look at when he invented this. Okay, now it's evolved over time. Okay, we'll talk about that as we work through it. But he invented the Ichimoku Kinko Hayo in 1935 and wrote his first book in 1969 regarding, okay, how he sees the market, well, how he saw the markets back then, in a total of 7 volumes. Okay, so 19, that's how long this has been around. Okay, and you have a lot of your Japanese traders, especially like your traders, pro traders, right, that work at trade desks. They use the Ichimoku cloud, a lot of them. Okay, so it's a very, very powerful tool once you get to understand it and to become comfortable with it. Okay, so it's very, very important with anything, not just to use it, but to understand, right, the philosophy behind it, the way he saw the markets, okay, and why he developed this indicator the way that he did. Okay, so the overall philosophy was number one: know the presence of the market. Okay, you're just talking about that all the time. Know what you're trading, and know it inside and out. Have a directional bias. Know what the overall sentiment is. That's why we stress technicals and fundamentals. Okay. Number two, timing is everything about the market. Okay. He really specializes in price and time cycles. Okay. We won't get too much into time cycles today because we'll go about that for hours, but it'll tie in as we move throughout a little bit. Okay. Simplicity is the truth. Okay. That was one of the key factors in his philosophy. Right? So you hear it say all the time that the market moves up, down, and sideways. That's it. So no matter what an indicator looks like, no matter what the algorithm behind it is, the bottom line is that the market moves up, down, and sideways. That's it. Okay. Another one of his philosophy, part of his philosophy was be free and surrender. Okay. And that ties into mindset, understanding, hey, we don't control the market. Okay, especially us as retail traders, like, we don't move the market, especially the Forex market. Okay, it's the most liquid market in the world. Okay, and then always trade like having no positions. That's what he stated. Right, one of his books. Always trade like having no positions. So we're being right addicted to the process. Right, the process is what it's about. I mean, and it's a mindset thing. Those mindset Mondays so important. When you look at his underlying philosophy, you have 2 statements there that deal strictly with mindset. Okay? It's a huge part of trading. No matter what the indicator, okay, if you don't have the right mindset, if your mind's not in the right place, it becomes hard to be consistently profitable and consistently successful over time. Okay. So just a little bit about the history and the overall philosophy. Okay. When we talk about Ichimoku Sanjin and his creation of the Ichimoku Kinko Hayo. Okay. So that's that. Now let's talk about it. Okay. Because in essence, right, what's amazing, okay, and beyond how it looks on the screen, we're really talking about 5 lines on the chart. Just 5. Doesn't look like that when it's all together, but you're really just talking about 5 lines. And the first one is called the Tinkinson. Okay? The Tinkinson. Okay? Now, if you're using like TradingView, okay, you're here called the conversion line. Okay? Translating that into English, the conversion line. All right. Now, what it takes is it takes the highest and the lowest prices of the last 9 days, okay, the highest and the lowest prices of the last 9 days, and divides it by 2, okay? Say it again. The highest and the lowest prices of the last 9 days and divides it by 2, okay? So you could say, like, if this was a daily chart, which is a 4-hour chart, you would look at the last 9 candles, okay? The last 9, that would be days, because that's where we would be on the daily chart. And here you're looking at the last 9 days worth of candles, okay? What it does is that it divides it by 2, because remember when we went back, we're talking about Kinko, equilibrium. The whole idea is to find where price meets an equilibrium between the bulls and the bears, and then that point when it starts to make the conversion to whether it's going to be bullish or bearish, that reversal point, okay, is what it helps us with. Now, I've had people ask me in the past when doing this, well, isn't it just a moving average? Okay. No, when you look at, it's a difference. Okay. When you take a moving average, say a simple moving average, say a 20 period simple moving average. What that moving average does is it takes, the way it's calculated is it's going to take the closing prices of the last 20 days, if it's on a daily chart, the last 20 candles, okay, like they say, periods, last 20 periods, and it's going to average them out, okay? And so when you're looking at a moving average, if price is above that moving average, it's just letting you know that the bulls, right, people who took buy positions over the last 20 days are doing well, okay? The bulls are in control, and then vice versa. If over that 20 days, if it's averaging down and prices below that 20 period simple moving average, okay, then we know that people who have taken sell positions are in control. This seeks out, okay, the equilibrium point, okay? That's why it divides it by 2. So if you look at a chart, okay, that first line we're talking about is that Tinkinson, your Tinkinson line, your conversion line. If you're using TradingView, it'll use the English term, your conversion line, okay? So that's it. You can see how it hugs closely, right, to price, okay? Hugs closely to price. Any questions on that? Nope. Okay. All right. So hang in there. Hang in there. Okay. So that's your first line, is your Tinkinson or your conversion line. Okay. Now, you'll see we're using numbers like 9, 56, 26, 52, 26. Those are base numbers. Okay. When you look at math, we won't go into too much details about that, but we have Fibonacci numbers, then you have base numbers. Okay. And so that really kind of plays into the reason why you use those numbers, because it really plays into the time cycle portion, which again, we're not going to go too much into that at all today. But that's why those numbers are being used. So if we go and we take a look at our next line, okay? Our next line is, in this example, our blue line, and this is called our Kijunsen, okay? Our Kijunsen, or our baseline. Okay, so if you're using TradingView, it's listed as your baseline. All right. Now, what it does is it takes the highest and the lowest price of the last 26 days, another base number, and it divides it by 2. So you can see here how it's a little slower moving. We've got consolidation here on this Aussie dollar. So anytime you have a consolidation in the range, you're going to see, whether it's a moving average or these lines here, a Tinkinson or a Kijunsen, you're going to see it move through price. But you can see how it doesn't hug price as much when it's trending. Okay, so it's a little bit slower. Okay, so your highest and your lowest price of the last 26 days divided by 2. Again, trying to find that equilibrium point. Okay, everybody understand that? Drop me a 4 in the chat. I'll walk through this one piece at a time. Okay. We don't want to be scared of it. We just want to benefit from it. Okay. So again, not like a moving averages where they're taking the closing prices, it's taking the high and the low prices and dividing it by 2, because that's going to give you the median point. Okay, the equilibrium. All right, simple enough. So far, so good. All right. Next, okay, we have what we call our lagging span. Okay, it's going to be a purple dashed line. And this is pretty cool because this gives you a historical reference. Okay, so this is your Chico span, or your lagging span, as you hear it called, okay, on some platforms. But what Chico means in Japanese is a delay, right? So what it does is lagging 26 days behind the current closing price. So it's giving you a historical reference. So if you went back 26 candles, you'll see right here, this is where price. So you can kind of gauge, compared to the last 26 periods, where is price. It's above that last period. Okay, you see that was a resistance point, it broke through it. So it's good for historical reference and helping you kind of determine, hey, am I trending? Okay, so it's projected, it's thrown back in the past 26, right, days or periods. Okay, in the past, the last 26 candles, you look at current price, go back 26 candles on this 4-hour chart, there it is, boom. Where was I? Okay, and where is price now? Okay, so it's taking a look back in the past for you. Okay, now let's talk about our next line. Okay, so we've gone through 3 so far. We said there's a total of 5 that makes this thing up. Okay, just a series of lines, okay, that all come together to form the Ichimoku cloud. Okay, so we have what we call the single span 1. Okay, and what it does is it takes the price of the Tinkinson, okay, so that calculation that we started out with, plus the Kijunsen, and it divides it by 2. And this is the coolest thing. This is my favorite part. And it moves it 26 periods forward. So it's kind of like the weatherman trying to predict the weather. Where in the next 26 periods, where could price potentially be based on, right, the algorithm, right, and the price action? Where could we be headed? So you can see here, if you were going 26 periods in the future, you can see where that line is up ahead. Okay, up ahead. Brilliant, brilliant, the way this is built out. Okay, so the price of the Tinkinson plus the Kijunsen, which we just went over, divide that by 2, and we're going to project it just the opposite of the Chico span, but we're going to take this 26 periods in the future. Okay, right? You say just look at it as candles. You'll hear me interchange it, right? So 26 candles. So if this is 4 hours, you look 26 candles in the future on a daily chart, right? Which is a lot of times where the examples are used. That would be 26 days in the future, because each candle would be a day. So just look at it as 26 candles. Okay. So you hear me interchange that periods. I use that kind of interchangeably because I'm not going to go over the time feature today. So I'm not going to put period separators on there. Good question. Okay, so just look at it as candles. We'll use it like that. All right, so with that Chico span, right, when we project it back, it was 26 candles. So that's 26 4-hour candles, and then here is 26 candles projected into the future. Got that? Yes, no? Got it. Okay. All right. So that's that. Okay. So now, we look at what we call this orange line here, the single span 2. Okay, fifth line is the highest and the lowest price of the last 52 days, another base number, okay, divided by 2, and move forward 26 periods, right? Okay, so go 26 candles forward, okay? It's another forward projection, all right? Now it looks crazy because we're just going line by line, but you'll see how it all comes together here, okay? So you can gain an understanding, all right? So that's it. We've got 5 lines. We've got the Tenkan-sen, the Kijun-sen. We've got the Chico span. We've got the single span 1, single span 2, right? Some platforms it'll be called single span A and single span B. Okay, so sometimes different language used. Sometimes you hear periods, sometimes you hear it depends, right, on what playbook you're coming from. All right. So we have where it could get projected backwards and in the future. Okay, so it can give you a historical reference in the past, and then it likes to try to project the algorithm forward into the future to let you know where price may end up. Okay, so when we put it all together and you look at all 5 lines together, it just looks like a bunch of lines on the chart, right? Anybody see that? Looks like it's kind of lit up, right? Okay. That's it. That's what we're looking at in essence. Bunch of lines on the chart. But when you put all the lines together and you take single span 1 and single span 2, you form what we call a Kumo, right? And in English, that means cloud. You guys see that? Let's go back. That's just the lines on your chart. And then when you fill in the zone between your single span 1 and your single span 2, you form the Kumo cloud. Okay. So you have now a complete Ichimoku Kinko Hayo, the Ichimoku cloud. Okay. And you can put this on your chart on any platform. Okay. Any questions so far? Nope. We got it. Everybody understand it? It's pretty simple when you really get down to the nuts and bolts of it. Okay. All right. So make sure we're clear. So let's talk about this and move into what we like to look for. Okay. Some areas. Hold on one second. All right. So when we're looking for, yeah, it comes in, I enhanced it a bit. The one when it comes in default, like when we go to the charts, I'll show you how it's defaulted. Okay, I kind of enhanced it a bit just so we can see it for the training. But usually when I use it, like I have a couple different ones that I use, but the default one is pretty faint. All right, and so it'll be totally up to you on how you want to put it together and how it makes sense to you visually. Brandon, you like these? It's cool, right? You can see it. Yep. All right. Appreciate the feedback on that. Just wanted to make sure that for a visual, right? I didn't want it to be so look cluttered, and sometimes the colors can throw you off. But so the first thing we want to look for, okay, and one of the most popular things is the TK crossover. When you're 9 period, okay, so when we're starting to look for price to reverse, and then you can kind of see how we tie this into understanding the Fibonacci sequence and finding those key U-turn points and then being able to drop an indicator like the Ichimoku cloud over top of it. Okay, so one thing that this cloud requires you to do is to be very, very patient and wait, right? We always talk about having patience. So this kind of puts some context to it for you, all right? Especially if that's an area where you might be having a challenge, right? Which I know I did for a very long time. And there's times where, I call Ryan, my man with the mindset, right? That handles the mindset. I say, Ryan, man, look, I'm having an issue. I'm feeling super anxious, so he has to talk me down on some of these positions, but this can really help you out because there's certain things that you're looking for. So first is that TK crossover, where your Tengen crosses your Kijinsen, where your conversion line crosses over your baseline, right? Because think about it. At this point, right? At this point, as these lines come together, you have that equilibrium. And then when you get the crossover, okay, the bulls in this example are becoming more dominant. Okay, so this is your TK crossover. So that's the first thing we want to look for signs of a reversal, is when you get that crossover. And as a matter of fact, when the cloud has evolved, because in his original writings, okay, it was the Tengen Kijinsen, the crossover, the TK golden cross, like you hear with the your big traders use with the 200 and the 50 moving average on the higher time frames crossing over each other. Your golden cross, right, which is the cross to the upside, and then your death cross is when that 200 crosses, that 50 crosses the 200 to the downside. So originally, it was the main thing was that TK crossover. Okay, so when you hear it say that, you'll know what we mean. Or if you hear that language out on the internet, YouTube, TK crossovers, it relates to the Ichimoku cloud. That's it, and is really evident when it happens. Okay, so that's the first thing, is the TK crossover. Any questions on that? It's pretty simple. Right? Some people like to trade moving average crossovers. Okay, so this is that kind of similar in regards to looking for that crossover from that faster moving, right, line over your slower moving line. So that's your TK crossover there. So we want to look for that. Okay, so you can see where price is still tracking below this cloud. See this bearish cloud? Okay, this bearish cloud, it provides a very, very, very good visual in regards to trend direction. Okay, that's another great thing about it. Okay, so it's tracking below the cloud, but when it starts to want to make that U-turn, you get that TK crossover. Okay. The next thing you want to see is you want to see your lagging span. Remember, this is 26 periods in the past. You want to see it cross over price. Okay. So if you look here, see how price you're here to say the Chico span is below or above price. So you see how this line pushed up, you got your crossover, and then your 26 period Chico span that's lagging 26 periods behind, okay, or 26 candles behind, it crosses through price. So now look, it went from below price, okay, to now it's above price. It's starting to make that transition, okay, below then above. You had a TK crossover, lagging span has now crossed through and gone above. You see how it crossed through? Your Tengen and your Kijinsen crossed through your candles, okay? That's another thing you want to look for, okay, for the trend reversal, all right? The next thing we want to look for is we want to see price, right, our candles break, in this example, bullish above the Kumo, okay? Want to see price break above the Kumo. So those are the three, okay, main things that you want to look for. Okay. Now there's a couple others that we're going to go over, right? But those, the way it's drawn up, those are the three main things. You want to see a TK crossover. You want to see your Chico span cross through price. In this example, get above price for the bullish move. All right. And then you ultimately want to see price break and close beyond the cloud. Okay, and this is an Aussie dollar play. So those three things, okay, is what we want to see. Now, for even more confirmation, okay, and this is what I like to also see, is I want to see what we call a Kumo twist. Okay, a Kumo twist. So you remember when we went over the Cinco span 1 and the Cinco span 2, right? Or A and B. So you can see that when you are bearish, okay, you have a crossover, right, with your Cinco span 1 and 2. Okay, so that slower one, the one that's calculated on more periods, you can see when it's bearish, it's on top. So can you see, can everybody see that orange highlight right there? Okay. That's that Cinco span 2 or Cinco span B that's on top there. Okay. So we're bearish and you can see your Cinco span A, this outline of the cloud. It's pretty cool, huh? The outline of the cloud is that Cinco span A. It's on the bottom. So we are trending bearish. Right, Brand, you definitely watching this again? Absolutely. Right? So it's bearish. Okay. So we go back and we look, right? Remember we track that? You see here, look. See how when this is trending up? Look at our faster move in that Cinco span 1. You see how it's on top? And then look at your Cinco span 2. Okay. Look at that on the bottom. And you see how price is moving in an upwards direction. Right? You see how that's moving in an upwards direction. So check it out. See, look. See how when it's moving down, it flips. That's the cool thing about it. It flips over. And that's what creates, right, your bearish cloud. So you've got a crossover that's occurring. That's what's going on. So if we come here and we look, we also, okay, so the fourth thing you can add to it is, all right, I've got a TK crossover. Okay. I've got my lagging span that crossed through price. Price broke the cloud to the upside and closed. Can I look 26 periods ahead, right? Or 26 candles ahead? And what's my weather forecast? Think about it, clouds, right? Think about the clouds. What's my weather forecast up ahead? Is it bullish or is it bearish? You'll see this twist. And you see how, if you look closely, how your Cinco span B and your Cinco span A, it crosses over. And now, just like that, with that crossover, you now have your uptrending cloud. So this is called a Kumo twist, a cloud twist. So it's twisted and it's flipped from being bearish to bullish. Okay. Drop me a 5 in the chat if you follow that. It's pretty cool. It's subtle, right? And some people see it, right? Sometimes people just like, oh, if you get a break, just trade it. if you get a breakout, cloud breakout, just trade it, right? I know some people might have heard that. I know I did in the beginning. Maybe it's just me, but I don't know, right? Like just trade the breakout, okay? But there's a few things that you want to look for, okay? Then ultimately, right? Ultimately, that's 4, okay? So 1, TK crossover. 2, your Chico span, all right, crosses and goes above price. Okay? You'll see it. 3, price breaks the cloud. And then 4, can I look up ahead, right? And something, you won't see this whole thing right away. You'll just see it subtly turn green, right? Or whatever color you're using for your bullish cloud. It'll change. The crossover occurring, you'll see it. It might just be this little small part that you see 26 periods ahead. Okay, that's how it usually works out. So that's 4 things there. Now a 5th thing, okay, is if you want extra confirmation, is you want to also wait for this lagging span, your Chico span, to break through the cloud as well and close out on the other side. Okay, but what I've noticed over my years and my experience with the cloud is typically by the time that your Chico span crosses over, okay, because it's lagging 26 periods behind, price may have taken off, and sometimes if it's impulsive off the break, then you want to probably wait for a pullback. So if you're waiting, you can call that the 5th thing, okay? The 5th kind of signal that you're looking for is that lagging span, that Chico span, whatever term you want to use, to break through the cloud. So now everything's on the other side of the cloud. Oftentimes price is pushed up a good bit, and you're probably going to be due for a pullback, either back into your Tinkerson and your Kijisen, or for a deeper correction, and then you can look to buy. So it's kind of like, hey, if you're a trend line trader and you trade trend line breaks and pullbacks, that's the scenario, right? If you're going to add this in there. Okay, so sometimes price, you have to gauge that if you want to use that, because sometimes price, that's a super safe way, is to wait for that to break. But then you're looking at a lot of times having to wait on a pullback and a correction because price has gotten away from you a bit. Sometimes you just need a correction, and now I'll take it. Okay, so you have to play around with that to see what you like. But mainly your 1, 2, and 3 first and foremost, and then looking for the forecast up ahead. What's the weather going to be like? Okay, that's what I always think about it, because it's the cloud. All right, pretty cool confirmations. So you can see how my ankle got broke on the crossover. But you can see how, right, at a glance, right, it's all right here. Okay, so now everybody, you understand why it's called the Ichimoku Kinko Ohio? It's at a glance. Like you can click on your chart at any time and get a determination on price. Is it above or below my cloud? Is the cloud and the moving averages, not the moving averages, but the Tinkerson and the Kijisen moving through price? Then it's probably just moving sideways. I don't want to deal with that, right? Kim, question. That accident? See a hand raised.
I'm sorry. I know. I'm sorry. I couldn't find my doggone mouse to unmute myself. I'm sorry. Good morning, everybody.
Good morning.
I was wondering if you can kind of elaborate a little bit more on, and I'm sorry, I don't have the terminology yet for the broken purple line. What is? You said something about it was here? The 26. Yeah, you said it was 26 something and lagging.
Yeah, it's a lagging indicator, so it gives you like a historical reference point, right, on where price was 26 candles in the past, right? So if you were to come here and look at if this candle closed and you went back 26 candles in the past, that'll tell you exactly where price was 26 periods ago. So it's like a historical reference point. So it's kind of like, all right, well, here I am in real time. I am moving, upwards in a positive direction, right? Well, in my directional bias, which is long on this pair. So it's 26 periods in the past, whereas your cloud, right, is projected 26 periods in the future. Yep, it also shows past resistance. Yep, it does. It does, and we'll take a look at that when we move forward, and take a look at the charts. Okay, I got hands raised. Let me see. What do we have? Cassandra.
Okay, so 1, 2, and 3 moves with price. There's no lagging in those.
They're gonna lag a little bit. All your indicators are lagging, right? That's why you just use them for extra confirmation. They're gonna lag a bit. right? Whenever
Okay.
you got a 9 period indicators, there's no real time. Your eyes and your candlesticks are going to tell you that, right? This is just
Okay.
confirmation of okay, I see it moving up. Okay, I got the cross. Okay, that's cool, right? All your indicators, even if you're using moving averages, right? They're gonna lag a bit. They're gonna lag a
Okay.
bit, but not so much to the point where it's throwing you off and you're too late. The cloud is designed to really help you get. So you'll see how we get those early entries sometimes on, coming out at 118, 127 zone. The
Yes.
cloud is more conservative. Is not, so we'll drip trades in early. The cloud is more conservative. The cloud is, they want you, it wants you to get not all of the move, but the kind of like the meat of the move, the majority of the move when it's going. Okay. So that's the goal with the cloud. Is more conservative than some of those more aggressive entries when it comes into a zone like that 80-20, right? So you'll actually be waiting a little bit, and we'll look at that here as we move forward. That's a very good question, because that plays into like your stop placement. You can see here how you see the waves, right, in your cloud. Okay.
Yes.
So somebody mentioned with the Chico span, like past resistance. Yep. The Chico span, because it's moving. So you can see that in the past, but you can see here too, like resistance, right? So this is why we start out in the basic, right? So we take you guys somewhere how we draw the little staircase moving up, right? With the swing highs and the swing lows. You see how that's all relative to the cloud. You see those levels
Yes.
moving up. Okay. Those are relevant. Those are very, very relevant. Okay, and we'll see that as we move through. So it really is kind of like a one-stop shop. That's why you'll see some traders. This is what they had. This is what they use. This is it. This is what I'm going to use. So you can look at your Tinkerson. You see how it hugs close to price. When you talk about these lines, your Tinkerson and your Kijinson, your Cinco span. 1 and 2, you can look at these. You know how we teach you all how to draw your inner, your outer, your long-term trend lines?
Yes.
This is when you look at Tinkerson and your Kijinson and your Cinco span, A and B, or 1 and 2, or whatever terminology you want to use. When you look at those, or you trade with moving averages, those are like trend lines that hug closer to price, that are more elastic, right? You know how rigid trend lines are, right? They're just straight, right?
Right.
Where as you look at these lines and you look at moving averages, there's more elasticity to those. Okay, that's why some people like using those, right? Because it rides more with price. Okay, so we'll definitely look at some of the advantages of it when we move on and take a look at some of the. I think I have them here in the. I haven't done this one in a while. In the screenshots, I think I've got some coming up. So, yep, that's how you can look at those as well. Okay, so it's quite fascinating how it plays into what we do with the Fibonacci sequence and everything.
Okay, thank you.
You're welcome. We had another hand raised. Let me see. Kim. We're good. Maybe that was from the last time. D?
Yeah, that was from last time. I'm sorry.
Okay, that's okay. D, you have a question?
Hi, good morning, everyone.
Good morning.
So maybe you'll probably cover this, and you kind of actually touched on it a little bit. So I am always fascinated with the flatness portion of the lines, and also the Tinkin and the Kijin. And maybe, like I said, maybe you'll touch on this. I've noticed that, especially on the longer time frames, and maybe even on some of the smaller ones, price seems to attract. Once I see like a flat Kijin or Tinkin, my eyes get a little bigger, because I tend to notice that, and if everything, all the other confirmations like confluences come together, that that the price will eventually get there. Sometimes on the longer time frames, it's a little nerve wracking because I know it's going to get there, but it's like when. but but I do notice that the price eventually gets to those flatter lines, and I'm trying to understand the significance of those. Like I get it and I see it, and I've been in instances profitable with it, but I'm still trying to get the science behind it a little bit.
Yeah, and we'll take a look at that. But price, when it starts to flatten out like that, for one, you're starting to find that equilibrium, right? So it's really cool the way these are calculated, like the role that they can play. Like it'll move, become that diagonal support and resistance, like a trend line. It'll play that role, and then it will flatten out. They will flatten out, and price gravitates towards, like we always say, like with trend lines, that price, it likes to gravitate from trend line to trend line. So if you get an inner trend line break, there's a high probability that it'll go to the outer trend line. It's kind of the same thing like that magnet, but price is trying to, just over time, trying to work back to equilibrium. That's why I like the Ichimoku so much, and the way it's calculated is because it's like how some traders love to trade breakouts. Well, in order for you to have a breakout, you have to have that period where price ranges, because it's an equilibrium. There's an agreement there on price. And then at some point, either the bulls or the bears are going to push out of that. So it's cool, like you say, where it kind of plots out that historical reference point of where that equilibrium is. And then it's amazing, right, how price does tend to find its way back to it. It does. It's, but I guess when you look at, you're talking about the psychology of people, the buying and selling habits of banks, institutions, right? Retail traders, and as human beings, right? We have those thoughts that become behaviors, and we all have what? Behavioral patterns, right? I know all my kids, they've got their own behavioral patterns that you just know when certain things like, oh, I know exactly how he's going to react, or how she's going to react. It's the same thing, because we're really just looking at those footprints of banks, institutions, and people all around the world, and we're human. Even if it's an algorithm, right? It's human beings that are controlling those. So it's just like how when price it's like support and resistance, right? How when price breaks a level, it likes to go back and retest that level, revisit that level again. So it's similar to what you're talking about with these lines, or even if you trade with moving averages. So great question. Dewan.
Hey, thank you for allowing me to ask a question. Everybody's having some great questions.
For sure.
I mean, I keep getting so every time you make references to certain things that are happening, I keep getting phrases of movies, such as Back to the Future and stuff such as that. And then I was following you on 1, 2, and 3. And then that Kumo twist, the reason why I said, my ankles got broke was because, it kind of, I couldn't see. Well, okay. So I was trying to follow where in areas where you were talking about, they would touch and converge. I'm not sure the exact terminology, but the twist. Yeah, the twist, right. And right, yes. So, I mean, that part seems fairly simple, and it was kind of an aha moment, but, it was, it was after when you talked about the break above, or before, after that, the break above with the lagging, where it's, yes, yeah. So I was trying to figure out, okay, you said that's where price was at 26 periods ago, correct?
Right, it'll give you, right, it's giving you a reference point, right, of where price is. So when you go back, this is where price, you see it here, right, where you see where it is right here for this example. Okay, so it's like, man, I'm trending up. You see that?
Yes.
You see that there? No, those different, that point down here. Okay.
Yeah. Yep. I see it.
Straight up. Yep. Where it was when you count back. That's where price was. This is where I am now in relation to it. Mm-hmm. Mm-hmm.
I see.
Yeah. So we're making a move in a positive direction. Like it's just another good reference point to be like, oh yeah, we're definitely at the 26 periods ago. This is where I was. Look where I am now. Right. And then some people I like leaving it on there. Some people take it off, and some people, I don't know if it's because they're playing. I tend to leave things like you don't see me ever. I truly believe like where there's it could be Bollinger Bands, whatever. When you go back, you can find a lot of these people, especially like my man that created the Bollinger Bands, like he's still around. So it's like you can go back and find out the philosophy behind why they did certain things. So you'll never see me like take something off or change it because it's supposed to be there for a reason. You know what I mean? But you have some traders that'll just take that off. But some traders, they just look at strictly for breakout opportunities. So I guess you kind of develop over time what you like, but I tend to just leave things where they are, and leave it in its original state. But it's just letting you know, like, man, it's so when you're trading with this, like if you wait on that, then that's just a reference, like, man, I'm because this is lagging now. Like I know, like it's just giving me that good reference, like, yeah, I'm bullish right now. But like I said, because it's lagging, it catches up. It takes a while to catch up to where price is. At that point, what I've seen through my experience a lot of times is it's like, okay, I got this break. Let price pull back, right? So some people play it. I'm gonna let it pull back into, my Tinkerson and my Keejensen, okay? My Keejensen. I'm gonna let it pull back into there, and then if it holds, then I'm gonna get long, right? I'll put my support right below there, and I'm gonna get long from there. And some people say I want a deeper pullback, so I'll wait until it pulls back and retest the cloud. But you can see how we draw inner, outer, and long-term trend lines. Inner, your outer, your long-term trend line, right? That's what this serves. So you can see it.
Okay.
It play. You get what I'm saying? You see where I'm at with it?
Yep.
So this is the equivalent of like this holding. This is holding at my outer trend line, okay, and get long. So people will wait for pullbacks into these lines and then get long. Or like I say, wait until it retest, okay, because that's really just testing. You fill it in to create a cloud, but that's really just testing another line, right? See that?
Okay.
See that single span A that we got here in blue?
Yeah.
It's just testing that, and then this would be your last line of defense. You see that there? Okay. And that's what when she asked the question about how it acts like a magnet and how it can serve as support, especially when they get flat. You see how that flattened out right there?
Yes.
And it held. You see how it's flat right there, and it held it, right? And so when they get flat, they can become pretty strong levels. So it's fascinating. It really is at a glance. Like you could pop this on your chart, especially using like the fibs, because I love using those fibs. That's why I said we just use the fibs as like the tuxedo, right? And just dressing up price action, because the fibs help me find those high probability U-turn points. Is it all the time? Absolutely not. Do you get these signals all the time and they work? Absolutely not, right? But when you put it all together, it could be a pretty powerful tool for you, right? To put you on the right side more often than not. And we know that we don't have to win because of risk management. Every single one of our trades, we don't have to win the majority to make money. But hey, what if I could win the majority of my trade? Like, what if I could,
Right.
and had a proper risk to reward? So you're always fine tuning and trying to get better, and add your tools to the game. I just think that once it was taught to me, when I first saw it, I'm like, okay, get this mess off my chart. But you know what I mean? But when it was broken down, I was like, oh, this is simple. This is so simple. This is so simple, and what it's telling me, and it was falling in line with really kind of what I was doing anyway. It would just enhanced it. So kind of combine the two.
Right. I think I need more reference points just as far as because because when on here on my notes, I got the TK crossover, Chico span crosses price. However, I think what I needed is maybe to add the color next to when it happens, so I can have a better visual, because I see right there where it says the TK crossover, which is the Tkinson crosses the Kijun, and I see you have, that's number one right there, right? And then it's red and it's blue. However, I'm not quite sure which one is which.
Where the ticket, this is your, you can look here too
Oh,
on your
okay.
right there. No, it's okay. No, it's okay, because you depending on how you want to set up your charts, it could be two totally different colors.
Okay.
Right? It could be two totally, it could be purple and green, you know, however you want to do it. But this is my Tinkinson, right? So that's my 9 period crossing over my 26 period. Yeah.
Okay. Yeah,
Yeah,
I'm gonna
yeah.
screenshot this.
Yeah, for sure. For sure. In the chat, hold on, we've got correct. Just to make sure I'm correct, you have your up as green and your down as red. Yep, that's it, Brandy. That's it for the Kumo. Ella, it's all good. Totally understand. This is my main objective for this morning. We're gonna get through some pairs to check it out just as it relates to this, but this is the main part for the agenda today, because we've had so many, we get inboxed about it all the time, and I didn't want to just throw it into like like one of our hour-long sessions during the week, because then it just becomes a series and it gets choppy. So I wanted to use this time today to kind of cover it. So that's a good question. That's a good question. It's all good. Yep. Okay, Brandy. Got it. All right. Any other questions? So this is just extra confirmation, right? So think about, we're like, when we play those 80-20s and things like that, we like those. It's high probability U-turn points, your 61/8s and things like that with the trend. So this is kind of like, hey, I want some additional confirmation on it. So going forward. Yep. You're welcome, Ella. Yeah. So typically we do use these days to go through the charts and look at the pairs. So just a little bit different this week. Yeah. So here's an example, right, of how, okay, and we had a question on this, right, of how these lines can act and serve. So think about it, okay? Look at your Tinkinson acting as an inner trend line, okay? It plays two roles, right? We know that there's a diagonal form of support and resistance. What's cool is because there's more elasticity to these lines, or if you're trading with moving averages, you see they kind of change shape a bit and can go flat as that support. So this is your Tinkinson, right? So you see how price pushed up, and then look at your Kijunson, okay? Your 26 period. So that's your 9, that's your 26, okay? And then look at your Kumo, your cloud. Look at this. This is bullish, right? That's your single span A that's riding over top. So you have a green cloud, and then your Kumo, your single span 2. Okay, look at that, right? So you can see the levels, just like how, right, we traded. Okay, so if you're in an 80-20 scenario and you have this on your chart and you see this, right? Look at that. See that gap? I love when I see that gap there, because who was that again that mentioned that, like a magnet? Who was that? Speak up one more time for me.
D.
D. All right. Yeah. Sorry about that. D, right? You were spot on, right? Is this kind of what you were talking about?
Yes.
Yep. Oh yeah. So it kind of, when I apply it to like the fib sequence and the spots that I like to trade. Now, the spots that I like to trade don't have to be your spots. Like, some people love trading off of 382. They love trade. That's going to be totally up to you guys, right? So if I'm in an 80-20 zone and I've got something like this, right? I'm like, oh, let me get a break and a close, right? So that doesn't veer too far off of what we talk about with, if you had an inner trend line break and you put your stop above the high and you let that price fall, Okay, this is just putting some confirmation on top of when you see this pattern here, like, oh, I've got that gap. I like to trade that gap between this Tinkinson and this Kijisen. And you see how that's flat right there? Because it can play as that diagonal, right? Like a trend line form of support and resistance. And then you got that flat hard form of support and resistance. Okay, so there's folks that trade this when price drops. If it holds at that Kijisen, say you get a swing low that forms there, they're gonna trade that. They're gonna trade that back long, right? There's so many things you can do with it, and then you can see here, right? You see in the future how it's projected ahead. This is still bullish. You see how it flattened out here. It got because you found this equilibrium, like it's neutral to bearish. See how the cloud is flat, right? And now look at that. See, coming straight down. So cool. I'm so fascinated by it. But you can see here in the futures projecting ahead, 26 candles ahead, that this is where price may come, but we're still bullish. So it may retest these price levels, right? Support. Okay. Support. Dewan, what's up?
Hey, I was also looking down right there where it has that little twist.
Right here.
Yeah.
Yep. Yeah, you see how that's twisting and going long? So it's like, okay, I can play this, but when it gets down to this area, right, this is probably gonna this is a correction play and then a continuation. You get what I'm saying? Because look how that started to get long. All right. So if it holds at these levels, we're looking at a continuation, a correction, and a continuation. Right? So we may not be getting an overall trend change, it's just a correction. And we know how to trade those based on the Fibonacci sequence. Great questions, everybody. Any other questions as it relates to this here on this chart? You see how your Chico span, you see how it's above price? That's what we mean by above or below price. It's above price right now. You see how when it's just moving through, it's just moving sideways. Okay. All right. So check this out. Discipline, right? We don't want to trade in the cloud. Okay. Just think of it like a plane, right? When you as long as the plane is above the clouds or below the clouds, it's good. You don't want to be in the middle. You don't want to be flying through a stormy cloud. You don't want to be flying through a stormy cloud. So we don't want to take trades in the cloud. We don't want to make any type of major decisions while we're in that cloud, right? A lot of turbulence in there, in this zone. Okay. We want to wait. Okay, we want to wait. Okay. Any questions on that? That's pretty simple concept there. I don't want to trade. I don't want to take trades in the cloud. You don't want to do that. Okay. So here, this is a setup with the fib. Okay, where we just saw that. Now we just put the fib on it. See? All right. So look at your Tinkinson. Okay. And I call as a strategy one a TK gap, the 80-20 setup, right? So it's kind of hitting it. Not quite in the zone where I want it to be, right? But if we get short, we have to think about that. If it breaks and closes, we get a nice bullish candle to close below this Tinkinson, right? We may be working our way down to that Kijisen. Okay. It all comes together there. See? I would love for it to push and expand, widen that gap some more. So I like those 80-20s and then just let the bottom fall out of it. Those are the type of setups that I really like. Okay. Jerry, I would agree. I would agree. I would agree. Yep. So this, right? This is my sweet spot. So it's just putting an additional confirmation, forcing you to stay disciplined and saying, wow, if it just keeps running, right? You know how sometimes it could just keep going to the D extension, it accelerates, it just keeps rolling. And sometimes we have that trend line and it'll just keep running up the trend line and keep going. So it's like, man, I didn't take the trade, right? What was it? Thursday, we were looking at, I think it was the Aussie CAD. I was like, man, you kept saying, if it breaks this support, That support held. It came back to the support again, double bottomed, and then just took off like a rocket to the upside. And we're sitting there saying, hey, if this support, if the price closes below the support, we're gonna get it. And we couldn't get it to close below that support, and it just took off. But that served as good confirmation that it didn't break and close below that support level, and then it just took off. So it didn't get into the trade. But it's kind of the same scenario. Just those extra confirmations sometimes can help you to be a little bit more patient and really help you out. So that's one strategy, is trading that gap, right? That's created. Okay. Like Dee said, it's like a magnet. Okay. On top of the fact that you've already got your fib set up and you know that you're coming into one of those sweet spots where price can react and correct to the downside. Okay. Inner, outer, your long term. Okay. So think about that. If this is the Aussie dollar and we want to stay long, think about that. If you got that correction, look at this here on the 4. If you get this correction all the way down to your 61.8 to your buy zone area, and it holds, right? And it holds. So then you have that option, right? Just like we said, you either put your stop below the A or below the C. So now, hey, if it holds here, maybe I'll just put my stop below the cloud. And as long as it stays above that cloud, look at my future. My future is bullish. So if we get this correction, comes into my zone, we're still bullish. I look, that Kumo twist is still intact. Then that just gives me confirmations. You know what? I think I'm gonna get long here. Everybody follow me on that? Drop me a 1. Okay. It takes a lot of patience. Make sure you get clean moves. Sometimes that's tough. That's tough because the mindset a lot of times is we talk about it over and over again, is I have to constantly be in the market trading to make money, you know, and you don't. You know, if you just wait for your clean setup, you probably could take a quarter of the trades and make more money, you know, depending on your trade plan and your strategy, right? So that's that there. And then you can see here where on this one, it was one way back, but I should have pulled that one in. But this is kind of one that may just be beginning. Now it's moving sideways, kind of ranging, but you can see how this original push down into the zone. You see how everything is kind of just still moving sideways, even though you got that, because of that huge fundamental reaction. Look at that push down in the zone. And then even when it pushed up, look at the price action, right? Look how you're still bearish. So if you go back in time, you will be seeing this bearish cloud. So look how it bounced around, and you've got your Tickerson and your Kijinson pushing through price. So even with that move and that push up, it's not quite there yet. But now look at your crossover to the upside. Look at your crossover. Look at your Chiku span. Look at this funny business here, right? How it just stayed below price on that impulsive move. Look at your Chiku span now, how it's crossed above price. Look how price is broken above the cloud. And then we close out the week. Of course, it's moving sideways on a Friday at close. But you can see here, you see how you got that twist, and you see in the future how it's saying, hey, could be bullish, right? Could be bullish. And it really reacts to the volatility. Like you see how this is just flat. See how that's flat? It's not any upward or downward trajectory. Well, it's Friday, it's flat. The liquidity is low, it's getting flat. Look at the cloud. Look at the flat cloud there. See how this is kind of, you know, going in that upward trajectory there, moving up. See how this is flat, you know? And sometimes it'll catch you, like if your Asian session opens where there's not a lot of volatility, you may get a series. Like if price is moving sideways, it's kind of like using the fibs, how your fibs consistently is really, really good. This is really, really good for trending price action, because if it's moving sideways, you can just get a series where you keep getting twists because it's moving sideways. It's kind of like how your fibs, if you try to plot your fibs on sideways price action, your fibs just keep getting taken out, right? Either the B gets taken out or A gets taken out. It just goes back and forth, takes your fibs out. So it's kind of the same thing. Is good for trending. The crossover number 1 in this area of the trend line rate. Yep. You're talking about down here, moving up with your trend line break there. Yep. So if you're running the trend line, I think that's what you mean, right? If you're running a trend line, you got to break.
Yes. Mhm.
Yep, absolutely. So it falls in line with what we teach you fundamentally. You know, some people just like, hey, I might not necessarily want to run trend lines. I'll just use this. I just put my chart, my cloud on, and then I'll use that because I know what to look for. See? So it's just that little bit of extra, right? So you let this happen. Okay. So you know how we have that early entry. So a couple ways like I've played it in the past is I'll still use my small entries at these levels. And then if it progresses and moves up, so say I'm in at 1/4%, if we get that reversal and I get these things to happen, then at that point I'm looking to add to my position. Right. So it depends on what your trade plan is going to be, but you can still use that same, you know, method. And now, okay, well, if I get this break, I'm just going to add to the business. So that may not be my original entry. It might be an additional entry at that point when it breaks. So you guys have to fill out, fill it out for yourselves. But I have used it like that in the past. Okay. All right. So let's jump out of here. What questions do we have? Any questions?
I got a ton of questions. However, I think the session will go too long.
Well, you can ask them if you want. If you have,
But I'm gonna wait.
Okay.
You might explain some. You might, I'll give you a chance to do your thing because
Yeah. Yeah, Jerry, yes, you get cleaner moves on your higher time frames, but lower time frames are just a fractal of the higher time frames. It can be used on any time frames. Your transitions and your crossovers are just going to be more frequent. You can use them like a lot of times if I'm entering, you still can use kind of like that. Let me see if I can find something in here. I don't think I have it running on all the charts, but if you take like this 4 hour, this Aussie CAD, right? And you can see like if we go down to the 15, this is what we were looking at on Thursday. Isn't that crazy, everybody? We were looking at this on Thursday, like, oh, if it breaks this level, I'm good. And look what it did. It just wouldn't break it. Then it came back to it and double bottomed and took off on it. So we didn't get to short that one, but on your higher time frames, it's coming into some zones anyway. So maybe it's just working its way up to those levels. So you can still do just like with anything else. Like how we can kind of wait for price, right, to get into our zone. So this is another one here on this Aussie CAD and how this is pushing up into the zone. You can still come down to your lower time frame and do the same thing, right? You could drop a cloud on your lower time frame. You could come down to the 15, right? And you can hold on one second. Okay, so you can still come down to your 15, right? You could do something like and put your cloud on the 15 and say, right? So on the 15, as this crosses down and that breaks that cloud, you can say, you know what? I'm gonna play a cloud breakout. By that time, right? Kind of hard to go into the future, but by that time, you may see 26 periods ahead where this is getting bearish. So you may see this come down and break through the bottom on your 15. And you kind of get that early entry, that higher time frame, lower time frame type scenario. So you can see how this is already crossing over and trying to work its way down on your 15-minute chart. So this could easily, right, come down and make its way down. Uh-oh. So you can easily come down and well, Make sure I got power. Okay. So you can easily come down to this time frame, and by the time you get here, you may have where you see that crossover up ahead bearish. And you may say, you know what? I'm looking to play the breakout. Okay. So I'll have my TK crossover. I look ahead, I can have a bearish cloud up ahead forecasted. And then I get this break and this close below that. Well, then this could be my signal entry to get short to my target. And that's coming down to the 15 and getting an entry off of that. So you can use it on all time frames. You can use it on all time frames. Yep. You're welcome. You're welcome. Now, do you get cleaner looks? Do you get super clean looks? Like this Aussie CAD? Watch this. All right, when you drop this on here. You see how that's pulling deep into the zone? Click on, let's get this out of here. So if you put it on your daily, I would say for your long-term swings, it's a monster on the daily. Okay, so if you put this template on like this, see that? Okay. Now you see how this twist and how this is turning bullish. Okay, see how that's starting to turn bullish, and you see how we're pushing. Okay, all comes together. You see how this is crossed through price. Look how that crossed through price. Look at your crossover here from on your daily. See a TK crossover? How that's moving? Okay. See how that's moving? Now, this is pushing up into the zone. So we look at our rules, right? Anytime, a lot of times when you get into these higher, which is what makes it so lovely, right? So anytime you push into these higher zones, okay, and say overall right now we've got a higher correction, okay, but we're still within this AB boundary on the daily. So say my stop was above the A, and that's what makes this so powerful with the fibs and that sell zone that it maps out for you, and why it's the optimal place to sell. Because say this pushes up to this weekly level, okay, and it starts to stall a little bit, and it holds in your sell zone, and then this what is now this bullish, right? It turns bullish. You may say after time passes, you may see that cloud get bearish up ahead 26 periods. And that can tell me in my zone that, you know what? If I get this to break down and break below the cloud, right? So you project forward like, oh, it looks like that's going to be starting to get bearish. And you see I'm in this zone up around this area. Then like, you know what? This may get ready to turn over and get short, right? It may be ready to get short. So let me see if I can. Right. So this was a pullback into the cloud, right? You see that breakout? See how it broke through and pulled back into the cloud and then got short? And then you have your rules like, man, as long as it's staying below my zone, I'm just gonna stay in it, right? Because sometimes we have issues staying in trades. So you can use, a lot of the features for the cloud to help you stay disciplined and stay in positions longer too. So this may be up ahead, a bearish cloud eventually. And if I'm sitting in my zone, I'm like, this may be ready to turn over and get back bearish on, right? Or if I take out my A and I'm looking at a bearish cloud, then I'm like, all right, well, the longer term trend is probably bullish. This Aussie is going to just stay a complete beast and move topside, then I'm going to get long. Right? So you can use this to gauge. But anytime typically when you get like a 61% pullback or higher in your zone, it's going to break the cloud. That's a long move. That's taking back a lot of what it gained. 61%, 78%, 86%. Right. So you expect to see that. You're going to expect to see that right there. Okay. So you can use it. Same thing here with these reversals, right? That B boundary reversal. You can use the cloud, say down on your 4 to play a breakout. You can do a cloud breakout on that. Okay. But you can see here, you've got everything in the making. You've got, look at the TK crossover, right? When price crossed over. Okay. So does it catch it in the very beginning? No, right? Like you could play your entry off support. How we find that a lot of times, you see how you got that swing low at support. Okay. And you can put in different things like, you know what? I've got support. I got a break in a close above my Tinkinson, right? Some people start adding positions in, dripping positions in that I've seen in the past, right? Add positions at the crossover, and then they add positions all along the way. So they kind of scale into the trade when at each occurrence, right? But if you wait, the TK crossover, you can see it's pushing up. It's made to get you the bulk of the move. So if this continues long, look at that. Look at your Chico span out across through price. Look at your TK crossover there. Look at price close. Boom. And it broke above resistance too. See? And it's moving up in the zone. So the key is just to have an eye, right? Just of what I like to see, whether it be on your daily, your 4 hour, right? Your 1 hour. Oh, I got a TK crossover. Let me drop down to the 1 and play the pullback. Let me drop down to the 4 and play the pullback. This is getting long, right? This is getting long. So many things you could do with it, right? And you'll discover that as a trader as you move forward, if you choose to use it, right? Some people don't want to use it, but you can look at this, right, as your outer trend line, right? We have our more aggressive inner trend lines, and then you see how this is coming down. Well, it just broke that, just broke through it. Okay. Then we look 26 periods up ahead. See? So this could have, right, further upside potential. We don't know yet, but that's what it's looking like. So look how you see how price has gotten away from the Tinkerson and the Keterson. Just like Dee said, it's like a magnet. At some point, it's going to gravitate back to that. It's going to continue to move. They're going to catch up, and it's going to pull back to that at some point. Okay.
Hey, Ben,
Yes.
is that too, once it breaks above the cloud, is that too far distant for a second entry?
To what? Get long?
Yeah,
No, it's all
just
gonna
a
come
shorter.
down. Yeah, it's all gonna come down to risk management for you. Just still manage your risk, based on where you want to move that stop, right? To add a position. I mean, because when you're playing on the daily, like what looks small is pretty big, right? So that's 55 pips off of that. You can even say, man, I'm looking for cloud breakouts. Like I said, oh, I got a cloud breakout. Let me drop down to my lower time frame to play a pullback off of fib. So many different things you can do with it. With the cloud. It's a really, really cool tool. I really, really like it. So you can see here this pullback into the cloud out that 382 that held. Right? See that hold and push down. Okay. See how price is moving sideways? You don't want to mess with that. See that there? You gotta just whipping in that, just whipping nasty. Unless you're playing a range. This is a daily. You can make range plays off of that. Okay. But as far as the cloud in a range, it doesn't really give you much. You see, it's really good when you got a trending, like when you've got a good impulse leg going. Okay. So yeah. So that's it. I just saw something in the chat. Aussie JPY on the daily just shot a daily resistance. Yep, let's take a look at it. So right. So we come and we take a look at the daily. And all right, let's put the cloud on this. All right. See how it's just bouncing around, just kind of moving sideways, but you see how it held in that zone and then pushed back up out of it. All right. See how it wouldn't close. That's a crazy move on the daily time frame. But it held at that level. You see it push up through the zone. See? But look at once price gets going, man. You see the cross, look at this here. Okay. Let me, this is on the way up on the previous IBs, but look at your crossover there. How that crossed over and pushed up and just accelerated. Okay. So let's do, let me go over. Okay. And let's look at this just to map out how things occur, right? Because we said, hey, it's lagging, right? So one cool thing on TradingView, right? You could just use the replay tool. So let's go back a little bit, okay, on this Swiss franc Japanese yen, and look at the current state of everything. Okay, look at the current state of the price action. Bearish cloud. Look at your Tinkerson and your Kijisen. Okay, and this one here. Let me check the settings on this one. So your conversion line is in blue here. So this is your Tinkerson in blue. Your baseline is your in red. That's your Kijun. So this is your 26. This is your 9. Okay. So look at the crossover there and how it's pressing price straight down. Look at your Chico span. Look at that. Okay. Look at the breakout. Gotta love cloud breakouts. Look at that. We close. Bang. Okay. So now, to look for signs of reversal, let's move it forward. Okay. Move this out of the way. And just look at it. Look at everything. Look at your Chico span. Look at your lines here. Your Tinkerson, your Kijisen. Look at it. All right. See it starting to cross. See? All right. See how this is pulling closer? We're getting a break. See that? Yeah, we got the break. Look, see here? See, we're above price. See how we're above price? Okay. You see the break. But you got the crossover here. You see how it's starting to make its run? Look. Still bearish though. See, look. See how that started to change? See your crossover? All right. See the pullback? And that's where we are. Close out. Pretty cool, right? I don't know. Maybe I'm just a trade geek. Ryan, what you think? Casey, what you think?
Yeah.
Good morning, Casey.
It's dope. It's dope. It gives a different confirmation for what we look at. And like you said, the biggest thing that it's helped me with is the patience.
Yep.
You know, I don't mess with indicators, so I don't see things like y'all do. So it seems like it's helping other people, so I'm all for it.
Right. Right. I knew that was coming. I knew that was coming. But yeah,
I think it'll be a great tool once you learn how to use it properly. Right now, it seems a little confusing because it's kind of new, but I do think it will be, you know, like you said, an extra confirmation of what direction you want to go in.
Absolutely. Absolutely. And the reason that's why we're slow to add certain type of things, because we are first and foremost price action traders, and we really wanted to develop a lot of content on that, because that it's hard to be a trader without understanding that, and then you just, like you said, it's just you're adding just an extra tool, should you want to choose it, right? So you can come even here, right? When you look at your breakout scenarios, look at that. See, it's all over the chart. Look, you see it, right? How it crossed over. Okay. So, and that's on a 4-hour. So, for your day traders and things like that, looking for just knowing what to look for. And that was the thing in the beginning. Like, very beginning, like nobody had taught me what to look for. It was just like, oh, just trade the breakout. When it breaks that cloud, but it just traded. Like, what? That didn't go so well, and nothing's ever 100%. But so if you come here and just look at the price action on your replay, right? See how that's starting to converge? Okay.
Have you
See how
found with your experience that it's more accurate in long-term trading as opposed to, scalping?
Scalping is just it's if you like trading breakouts, scalping has been pretty good. Like when I've scalped, it's been pretty good on the lower time frames. Longer term is that because it's just it really just I don't know. It's just price action period, right? Price action period could be a little bit more erratic on the lower time frames because it's really because of the data, right? You're not getting a lot of data per candle. Not telling you too much. So if I'm looking at a 5-minute candle versus a 4-hour candle, there's 4 hours worth of price data in a 4-hour candle. That's why you tend to see a lot of those higher time frame support and resistance levels hold a lot more frequently. And people's like, oh, those are stronger levels of resistance. There's more price action data. You know what I mean? So if price comes back on a daily chart and revisits a previous level of support, man, that's a lot of data. It's taking a lot of time for it to get back to that point, right? It took a while for it to arrive there before the first time. Now the second time is there. So that's more so, it's just your time frames is just a lot more price action. It's a lot more movement, less data per candle, but I've had pretty good success with it, right? On the lower time frames, I would just say to everybody, you just have to know what to look for. Like you see this here, you see how that turned? Look at my Chico span below price, right? Now, if you wait for this to push below, right? This is your single span 2 or B, right? If you wait for it to push below this level and close below that level, then it's lagging. So price may push down. And then at that point, you may look for a pullback. But right off the break, right? There's people that I know, they're gonna put at the close of that candle, they're gonna short. And they're either gonna put their stop. Some people are super tight. They're gonna put their stop above the high, right, of the cloud, or they're gonna put their stop they'll look for like bearish engulfing candles. If they get a nice candle to break and close, they'll put their stop right at the high of that candle, and they'll run that stop super tight because they don't care about getting stopped out. It don't matter because they hit that one runner and it's gonna take care of everything. So they'll put it right above the candle. They only want to sacrifice one candle worth of loss, right? Some people, and again, it could work either way because it's all about reward to risk and dividing your risk by your stop loss. So you're just trading smaller when you're setting at that high, right? They just like, oh, hey, I want to play bigger because now I've got a smaller risk. So if I'm risking 1%, I'm just going to divide it by a smaller stop loss. That's automatically going to give me a higher lot size to trade at. But I might get stopped out more frequently, but I'm cool with that because if I get that runner, that 2-to-1, that 3-to-1, I'm good, right? So that's how they think about it. So if you move forward, see, look, right? You can win. I mean, with those traders that trade like that, they're gonna win 35, 40% of the trade. They don't care. They don't care. It's not about percentage. It's about risk to reward to them. They don't care about win percentage at all. But you see how they got bearish and it's moving down, right? See, it never came back to that candle. That's why they do it, right? It never came back to that candle. That's a huge. That's huge, right? And it just moves. So if you go back and you look at that candle that it broke, say you took it off that candle, which that's super tight. It's a 4 hour, and you shorted at the close of that candle, and your stop is right there. Okay, and this is 4 hour chart. So you're looking for a 2 to 1 at least. You got it. 3 to 1. You got it. Okay. Keep in mind it's 4 hours. Okay. That's a 3 to 1. All right. So before that made a U-turn and popped, that was like that was a 5 to 1 trade on a 4 hour chart. Depending on how you watch and you monitor the trade. So you know, hey, if I get a break, again, that's like an inner and an outer trend line. You may say, hey, if it breaks my inner trend line, I'm out. Or I'm already at my 2 to 1, 3 to 1, I'm good. I don't want to be greedy because the market will swing back. Okay? The market will swing back. Like, look at it. See? And that's where you are.
In TradingView, can you put alerts on those inner and outer?
Oh, that's a good question. That's a very good question. Add alert. Ichimoku 920. It looks like it. Looks like it.
Okay.
Ichimoku crossing conversion line. That's yeah.
Yep. Great. Okay. Thanks.
Yeah, you're good. So yeah, you know. So if you're using your trading view, right? Casey made a video a while ago that's in our resources section, right? You can draw your same fib. You can set your fib up same way. It's not like that by default. You have to set it up like that on TradingView if you wanted to use your fib. Okay. But yeah, that's it. That's it. So it's 5 lines. That's what it is. It's 5 lines that's going to create that cloud. That's what you're looking at. Okay. Look, look at your crossover. Okay. Look at that. Look at that. That didn't come through very good, but yeah. Look at your Kumo twist happening. Okay, with these pairs. But the only way, right, you get good at it, you spend time on the charts. Like hours and hours and hours. Calling Ryan and Casey. Look, check this out. Right? Going back. Just instead of me Netflixing and chilling, just getting on the charts over the years. Right? Finding the patterns. It happens over and over and over again. Right? See? Watch. See the cross? See the cloud change? See a Chico span through price? Because that's how you get confidence to say, right? That was the beauty of watching game film in college, right? And in high school football, because you only can practice. Well, in college it's regulated for sure. So you only can practice so many hours and get so many reps, and everybody needs reps. So how do you get more reps? You get visual reps. That's why athletes watch so much film. That's why baseball players watch film on pitches and their delivery and the ball rotation, right? To know what pitch is coming. You watch film. So this, when you go back and you back test, That's why you hear a lot of people say, you need to back test, you need to back test. Well, I don't want to back test. Well, you need to back test because this is how you get your visual reps, right? When I got injured playing college football, coach, I'm just gonna go to the dorm and do my homework. Nope, you still need to be on the sideline and watch practice so you can get the visual reps. So when it comes back game time, mentally, you're still in shape. You may be physically out of a little bit of shape, but mentally, you're still sharp. That's why you go back and you back test, because if you see this enough, when I play ball, if I saw that lineman, right, from my quarterback position step, or I saw that quarterback turn his shoulders a certain way, I automatically knew this what was coming because I've watched hours and hours and hours and hours of game film, right? If I'm back at safety and I see this lineman pivot this direction, if I see him pulling, I automatically know I have to run the alley, I have to run the lane because this running play is coming. I got to beat it. This is the same thing. This is the same thing. It's no different, right? So there's your crossover. Look, you see how that goes flat, like how that went flat on there, like see how that flattened out, right? The trend lines aren't going to do that for you. Trend lines don't do that. Trend lines are great, but they don't do that. No elasticity to trend lines. So look, see how that broke? See how that broke through? Okay. See? Running. Okay. But the only way you build that confidence, this is a 4-hour chart, because when you first see it, none of this exists. That's why watching the game film is important. None of that existed. You just saw this and a price break through the cloud. And you saw your Chico span on the other side of price, above it. So you have to say, I gotta go. It's read and react. It's read and react. I'm putting it in there. I'm working on my risk management. And because over time, you'll know, well, over 100 trades that I did this was 45%, it's 50%. Can I live with that? Am I putting myself in a proper risk to reward ratio? When it breaks my zone, am I saying, okay, do I want to go long? Okay, I got my candle break. Wherever I get in there, do I want to put it below the cloud? Boom. What is that? 200. Again, it's a 4-hour. Do I want a 2 to 1? Okay, at least a 2 to 1. Okay. Some people go 1.5. Some traders like going 1 to 1.5, whatever. Okay. Bang. Okay. There. Do I come in? Do I go a 1 to 1 initially? Okay. 1 to 1 at this level on this swing. Do I go 1 to 1, take half my profit off the table, let the rest run to my 2 to 1? When I get to 2 to 1, am I adjusting my stop? Right? Maybe I adjust my stop before there to break even or in profit. When I get to the 2 to 1 level, if this trade is running, right? This is trade management now. When I get to that 2 to 1 level, do I take, right, another quarter off the table? Okay, leave another quarter to run. See if I can get a 3 to 1. However you want to manage it, whatever you want to do. The key is being able to identify the U-turn points and the fibs, and fundamentally, hey, I got a new AB boundary. Okay, do I want to look for a cloud breakout? I got a new AB boundary on the 4. Do I want to go to the 1 hour? Look for a cloud breakout, 15 minutes. Hey, I don't play B boundary plays. Or I just want to play the 80-20. Okay, well, it's up there, shallow retracement, 118, 127 zone, high probability U-turn zone. Do I want to use trend lines? Do I just want to slap my cloud on, drop down to a lower time frame, see if I can get a break of the cloud, get short? Oh, price has pulled back to a 61.8. I'm bullish. I like this zone. Okay, I got it. Do I want to drop down to a lower time frame? Or maybe you want to stay on the time frame. You don't have to drop down. And if I get a cloud, there's 300 pips from the C to the D. If I get a cloud break, Do I want to get long and go and start taking that C to D push? Something like this, right? And get moving. So that's how you can add on top of what you already know now for price actions, support and resistance. Again, your best indicator is always going to be your own two eyes. So you have to recognize price action, do your best to develop a directional bias, and then look, see if I can get it, see if I can get this to trend. Okay. So just some things to think about. All right. Ryan, anything to add? Ryan or Casey?
I was going to say a couple examples. And remember, right? The way Benny is teaching this and how we talk about indicators, right? We use them as additional confirmation, right? So you take the basis of the methodology that we teach, right, with the fibs, and you can add all of these things together to give you additional confirmation that this is more likely than not to go in my direction. If you go to the, can you go to Smart Trader and pull up this Swiss yen?
Yeah. Which time frame?
And go to the one for me.
Okay.
So how you can kind of add this together, and Benny showed some screenshots of it, right? But here, so you had the shallow retracement, 118, 127. Price came just below that daily level, right? So now if you copy that fib, that 1 hour fib, and take it down to the 15-minute time frame.
Yep, I just want to make sure I'm cleared out.
Yep. And this is how we've shown this before, like taking the fib from the higher time frame and taking it to the lower, right? So this is a similar example. You take that fib down to the 15. Now, if you put the cloud on there, so now you have your shallow retracement, your 118, 127 zone, and now look what happened. You got your break. Now price is pulling back, and where price currently is now, you have your lagging span is broken through price, and you have price potentially closing below the cloud. It's been moving sideways. And then if you look ahead, you also have the twist.
Yep.
In the bearish capacity, right? So now you have some confirmation. You had that original break out of the 118, 127 zone. This period in time, price pulled back into that zone, still hasn't gotten to your 38.2 retracement yet. And you're seeing this action happen with the Ichimoku cloud, right? So now we can start to build that bias, say, okay, we have all of these things from the higher time frame, right? Shallow retracements on multiple time frames, 118, 127 zone. And now here on the 15-minute, looking for a potential entry opportunity, we have this.
Yep. That's a great observation,
right?
man. It's a great observation. And you can see how because hey, we're moving into the weekend, Friday, things slow down usually afternoon, right? Unless there's a major fundamental occurrence. You see how it started to move sideways and moving through your candles. So Ryan is right on the money, because look, you got a bearish cloud up ahead. You see how these are flat? That just shows you the liquidity, right? And it's moving sideways. But if you get that open, like Ryan said, on Sunday, and that new candle pushes, that'll tell the tale, because this will your Tingus and your Kijis and start to turn over, and it'll eventually be over top of price, over top of your candles. It'll start to move over your candles. So that could be, the start of a breakdown. Definitely appreciate that. Yep, definitely appreciate you pulling that out.
And
now
then,
think about, go ahead, I'm sorry. Go ahead.
No, go ahead and finish. I was gonna go to another pair. So go ahead and finish.
Okay. So then think about it, right? So you remember how, right, if you watch the videos, right, you come in and you've been on some of the sessions, and we talk about the stair step for support and resistance. Look. See how it's moving down? See how it pulls all together? Again, at a glance, right? Ichimoku, right? You see it? You see this little level here? Okay, see it? Those are levels. Those are supports. Those are supports coming in there. Right. Yep. So yeah, go ahead, Ryan. What's the next pair?
That Aussie yen.
Okay.
And we'll do the same thing on the one.
Okay. So let's go to the one. Look at that
On
driving
the
up.
one, right? Driving up, coming into what? Your D extension.
Mm-hmm.
And you got a level of resistance just above as well. Right? So if you copy that fib, go down to the 15.
Clear it out.
And so just like we use the trend line and swing high and trend line break as the confirmation, it's the same thing.
Same exact thing.
Same thing, right? So now on the 15, you got price pushing to a D extension, right? So if we get a swing high at that D extension, right? Once it's hit, we drop the cloud on there. Now you have things slowing down a little bit, right? Starting to turn over, press below your Tinkinson, in between that Tinkinson and Keejenson, right? So we may get another push to the upside, right? To get to that D extension, and then we'll see if we get that bearish cross after that last push up occurs.
Yep.
So this is that patience in keeping you honest, right?
Absolutely.
You haven't gotten the lagging span to break through. You haven't gotten the TK crossover yet, right? You haven't gotten a twist, right? So we wait and we see, does that D extension get hit? And hey, do we push up to get to that resistance level that's just above that?
Correct.
Right? We got a little bit of ways to go, but that'll keep you honest.
Mm-hmm. It takes a lot of the guesswork out of it.
Takes the guesswork out. So at a glance, right?
Right.
Slide the screen down just a little bit.
Mm-hmm.
You got that resistance level just above, right? So at a glance, this hasn't met the rules yet. Real quick, right? You know where you are from a Fibonacci perspective off the higher time frame.
Mm-hmm.
Drop down to 15. Do I have an entry opportunity? No, not yet. We'll wait. And you know from the higher time frame, you haven't issued the extension yet, right? So you still have time for price to push up. So that's how you add it in as additional confirmation to say, okay, we did our top-down analysis. We got a fib on a 4-hour daily, 4-hour, 1 hour, and we're looking at, and you can literally from whatever time frame you trade on, you can do this. So if you trade off the 1 hour time frame, you can take the fib off the 4, bring it down to the 1.
Yep.
And look at it from the same perspective.
Yep.
Right? If you trade off the 4 hour, bring the fib from the daily to the 4. Same perspective. Right? And then you can monitor it on the time frame that you're trading on to say, okay, where's price in comparison to the cloud? And like Benny said, over the long term, if you're looking at those long-term swing trades, that daily time frame, when it breaks and runs, you'll see it. It'll pull back. You'll have those pullbacks on the lower time frame, and it'll come and tap that cloud on the daily and then continue pushing, right? Until it actually breaks and reverses. But you'll have that indication on your 4 hour, your 1 hour time frame.
Absolutely.
So the other thing, Kim asked, will it take years to become consistently profitable? And I'll let you answer that question too, Benny, but that depends on the amount of time that you're able to spend on the charts, the amount of time that you're practicing and you're implementing what we're teaching. A lot of your professional traders, Mark Minervini, said it took him 6 years, right?
He made no money.
I've been in this game. He made no money, right? It took me 5.5. So it literally all depends on the amount of time that you have to spend. Now, what I will say also is we have some students that, some members that they've grown to that point within the time they've been with us. and we'll allow them to speak for themselves. But we have some members that have been able to do that within the time they've been with us. But they also haven't missed a live session. They ask all the questions, right? They're with us from the very beginning, and they ask all the questions, right? And they implement. They show up to the Mindset Mondays. They're practicing. They're working on themselves, and they're working on developing that confidence. And they've gotten to that point, right? So it literally depends on how much time you're able to spend on these charts, and not just spending looking at them and marking up, but then actually practicing and implementing trades, understanding what your trade rules are, writing those out, revising those, right? And continuing to practice and implement what we're teaching and how we teach it, and then learning where your personality fits into that. And as that evolves, you'll be able to, but it takes time. So you have to be able to put in that time. So that'll depend on you.
Absolutely. That was awesome, man. That was great work. Great work. So, and then too, right? This is what happens to people psychologically. None of this is a holy grail. Some people will say, right? Price has moved down. Oh, I got a bearish cloud. I got to cross it, all that good stuff. And they want to put the mother load on the trade. Don't do it. Stick to your risk management. If it's 1% that you're risking, please keep it 1%. It's relative to your account. Don't go put 10% on a trade because you've added some extra confirmation. Don't do it. Don't do it to yourself, because you have those thoughts, right? I've been trading for a while. I get those thoughts, and I've got Ryan and Casey on speed dial. Right. So let me walk away and talk to somebody, because sometimes you get to the point where you just feel like you know. You feel like you know. You don't. You don't. And
Nope.
that could be that's demoralizing, right? Market's closed, is not moving. I didn't blew 10% of my account. I don't want to talk to anybody. I don't even want to go to work. Don't do yourself like that. It's not worth it. So, but
and listen, man, you're gonna have a lot of people tell you, risk it all. Drop that standard on your $200 account. No, man.
Yep.
You got a lot of people that'll tell you that. You'll leave this game quickly. You'll leave this game quickly.
Yeah. Yeah.
We do our best to ensure that we give you not only things that we use today, but also things from our experience that we saw, we felt, so that you may experience them in some capacity, but hopefully it's not to the capacity that we felt it, right? Because this is still an experiential game. But hopefully, with us being able to give you the things that we've learned, you can then take those and say, okay, they said this. I'm not going to do that, right? I'm not going to do this because this was their experience.
Right. Compressing those time frames.
Compress the time frames, right?
Shorten the learning curve.
That's why we created this, is to help people compress the time frames. And part of that is understanding our experience and being able to move around some of those potholes that we fell in. So don't listen to the cats that tell you it's okay to risk 50, 60, 70, 80% of your account, run the other way, man.
Fast as you can.
Run
Fast as
another
you
way.
can. Fast as you can. Because you can have, listen, you could pop your collar on a 90% win rate. But if you blow your account on a one trade, what difference do it make? Or if you win 90+% of your trades and you don't make any money, what difference does it make?
Mm-hmm.
It doesn't. That's just a marketing game, a hype game. So that's the way it goes. That's the way it goes. So this is another one that I'm just watching, right? At this level, you know. And I mean, please listen to the nuggets, right, that Ryan is dropping, because you've experienced. I don't say you never say you experienced it all, but it's got to be getting close. It's got to be getting close. It's got to be getting close. So just those words of wisdom, and we say it because it's tough, and you constantly have to talk to yourself. You know, talk to yourself, right? To make sure that you stay, you know, put your blinders on. That's what I tell my son every day before he goes out to football practice. Son, put your blinders on. You know, you're here for 2 hours. Put them on, man. Focus. You know, and it's a hard thing to do. You know, so having an accountability partner is huge, especially in this game, because trading can be a lonely world. It's you and the computer. You know, and really, unless you tell somebody, it's only you that knows, and it's only you that have to live with the fact that you blew your account. You don't have to tell nobody. That's totally up to you, whether you want to do that or not. But you have to live with it at the end of the day. So this one here, I'm watching this one. You see this breakout here, right? See that? How that broken that? You got things that cross over and break. So, but you see, we're bearish now. So that just tells you, right? We're not quite ready. We're not quite ready. But you can, if these are your levels, like how we set it up, you drop it in your 1/4%. How we were talking on that example earlier, like that said, I'm not ready, but this is my level and my bias is bullish, you know. So you may be that type of trader, right? Where I've got my limit, I think it's going to U-turn, but I'm trading super small at this level. And then if it gets green, then you can look to add the scale into your position. So there's so many different ways, or you can just wait. Like Ryan said, you drop it to your lower time frames. You can go to your 4, you could go to your 1 and say, you know what? I want to plot it out here on my 4 or plot it out on my 1, right? You see that? See how that's closing in? See how it's moving sideways, right? See, it's still bearish at this point in time, right? It'll tell you a story. It'll tell you a story now. But we know already, like Ryan was saying, we already know on the daily where we're at and what could possibly occur. We don't quite know yet for sure. Never know for sure, but that's in a zone to where my bias is bullish overall on the dollar, expecting the Fed to be hawkish against the Swissy. I mean, the stock market seems to be pushing through it right now, right? The risk sentiment is still on the side of the bulls. So, hey, maybe it dances around, but if that dollar starts to pick up steam off that support level that we saw in the DXY, then maybe we start to get this to push, right? This is where it all comes together and you start to see your cloud change over 26 candles ahead. You get your crossover, you get your Chico span pushing up beyond price. Okay, at that point. So different ways that you can play it. But we know from a daily perspective, if we get long off this level, we got a long way to go. Okay. Just want to see if we can break through on the other side. And you can always stay on your, you know, you're super conservative and you're not worrying about getting an earlier entry. You can always stay on your chart, your mother chart. So if I'm looking at this from the daily, okay, maybe you wait until it breaks the cloud on the daily, then you get long, you know, however you want to do it. Cassandra, question.
Okay, can you go back to the 4-hour example?
Absolutely.
All right. Can you drop the fibs?
Yeah. Mm-hmm. Yep.
Got it. Okay. I just wanted to see that. So as of right now, I'm just thinking through this. It's broken. What would have normally been that trend line is the, what is it? The Tecumseh. So in this case, you would probably, what would you do in this case? Would you wait for it to then break the Cajun?
Yeah, if I'm planning this out to 4, so I've got time on this, right? So, you know, I may not necessarily start now. I might, you could maybe start dripping trades. And first of all, it depends on like how you plan, like your trade plan, right? So maybe you're limited in at this zone if you already have a small percentage in just off your daily low price, thinking, hey, I think it's in my zone. I want to see it. I want to see price start to U-turn. I'll drip it in so many different ways. But just based on this right here, right? Let's wait to see, right? Are we gonna get that crossover? You see what I mean? In this zone, because this can easily, this closed out, right? Sideways on Friday. Okay. So the reason why I say this is aggressive, right? Taking it off the Tinkinson, but I wouldn't take it because it, see how it's just moving sideways. It didn't give us anything explosive to break it and close. Okay, so that's just reading the candles. It's just moving. It's hard when you get to the end of the week because everything slows down. But this can easily come into open on Sunday, right, and push down into your zone. Okay, well then, well, that didn't hold. I'm in this 80-20 scenario. So if it holds here and then I get that crossover, that TK crossover, then I might say, you know what, I'm gonna take a shot at adding position because I know where I am on the daily and the level that it's at. Right. Okay. So it drops down a little bit more. Okay, I'm in my buy zone. So now in a swing. Of course, this is why we use this to kind of signal us, right, as a possible exhaustion point, because this is a old ABCD, right? So that was an exhaustion zone. And now we got a new AB boundary. So the game starts again. So maybe I get it here and then I get that crossover. Maybe I want to drip a position in and then I'm looking at the cloud break from that point. You know, I'm riding up and if it breaks through that cloud and I get everything, I know I've got the TK crossover, right? I know I've got my Chico span above price now. And now my next level is, man, do I break through this cloud? And then I may drip in another position at that point. Right? If everything lines up, I've got my Kumo twist and I've got a bullish forecast, right? And it may happen here. It may dance around. That dollar might get strong, right? We saw that at support on the DXY. It might continue long from here and you get a crossover, then take the shot, right? Or you play it super conservative and say, this just let me know that this is a possible U-turn point, but I'm only going to take it when it breaks the cloud, because from a daily perspective, if that wants to make a long run, if it wants to start making a C to D push, that's a long way to go. You've got time. You got, you know what I mean? You got a lot of time there on that move because you spotted a potential daily low price, right? You got time, so you could just let it do its thing. And that's what I mean. Like you could just check. I mean, how often do you have to check back, especially if you're going off a 4 hour? Like, did it break the cloud yet? Yeah, break the cloud. All right. Well, I'm good. You know, I'm good until your sentiment changes. You know, if something happens with the dollar and the dollar starts crashing through supports, the DXY, and the dollar is weakening. You know, bond yields fall. You know, dollar gets weak. You know, it continue to plummet or something crazy. You know, then maybe it's like, well, it came into this, it pushed up. It just won't break it. Maybe it's gonna get back short on me. Time to get short. Then you're looking at it in the opposite direction. Maybe it's gonna push further into that AB boundary on the daily. So a few different ways you can look at that setup. But this really helps you. I know it helped me with my patience. It really did. Like here, see on this downtrend, you see how that pulled back into that cloud, right? See how it pulled back in there, and then it wouldn't take off, and then it pushed back down, right? Those levels are serious. So that's just one to keep an eye on. And that's what I mean. Like, you can trade, it sets you up in those situations where you can trade far less and make more money. Make more money.
Yeah, got it. Thank you.
You're welcome. What other questions do we have?
We got some things popping off in the chat. A couple things. Dewan said, "Can you get so good at the fib that you don't need it anymore?" My response is, I wouldn't even attempt to do that. It leaves so much to chance when it comes to your ego and your emotions. Oh, I think price is here. It looks like, it may be, I feel like. When any of those terms start to come up, that's all your emotion talking. Do you see it on the screen or do you not? Right? And if you don't have the fib on the screen, you can't see where price is. Right? You can see support, resistance. You can see your trend lines, but where is it in the Fibonacci sequence? If it's not on your screen, you can't see it.
Right.
So I wouldn't even test that theory. Personally, I wouldn't do it. Now, if you want to, by all means, but I wouldn't get close to it. Because I want to see what the market is telling me, not assume what the market is telling me. Right?
Yeah.
You want to answer something? You get it?
No, I understand. No, I agree with you. I agree with you 100%, because the fibs just do a great job of helping you with your overall framework, where to get in, where to get out, where to protect your backside, where your stop placement can be, right? Where that discounted high price, like right here, this A6. So say you took it off of here and you read that perfectly, like, oh, past support became future resistance, right? Past support became future resistance. Okay. Right. I got that red, boom, right there. So what's your projection to the downside? So then it becomes like, man, I just took it from resistance to the next support. Man, am I leaving money on the table? You get what I'm saying? Like, am I here? I got an A6. Man, my projection, I found price action, past support becomes future resistance into this cloud even. But that's a 200 pip move. How do I know that? Just falling right in line with what you're saying. Like, how do I know that's, do I want to leave that money on the table?
Yeah,
so
absolutely.
Yeah.
And the one, right? The ego, and that's for all of us, right? All of us have that ego that pops up, and
for sure.
It's something that I don't know if no one will ever be 100% to say, oh, I don't have an ego, or none of that stuff ever pops up. I don't think that anybody will ever be perfect, right? But it's about recognizing the signs that those emotions are starting to come up, because that's ultimately what it is, right? Recognizing the signs earlier as opposed to later, right? So understanding your mindset, your triggers, and that's why I talk so much about paying attention to what things feel like, right? What does it feel like in these different scenarios for you to want? What does it feel like when your ego, that freight train engine starts revving and you get off the tracks? What does that feel like? What triggered it? Documenting all those things. So now you have some guardrails you can put in place. When I feel like this, I can do this to mitigate the downstream impacts of that freight train getting ahead of steam, right? And I can bring myself back to center. Say, okay, now let me reset and let me move through. And so that's why all of that is so important. That's why I talk about it so much. Understanding how you feel in different scenarios, paying attention to literally your heart rate. Do your palms get sweaty? Do you get anxious? Right? Those little details are signals for us to pay attention to in different situations that give us insight on how we're feeling, what we're thinking, and it allows us to then make a conscious decision on what we choose to do next. right? Super, super important. Super important.
It's powerful.
The other one was Kim asked about accountability partners. We've talked about accountability partners in the past. Members that have been with us for quite some time. They're definitely open to connecting and working together. So by all means, if you guys want to reach out to a member, right? Say, hey, would love to connect with you if they're open to it. Excuse me, by all means, do that, right? Because like Benny said, this game can be a lonely one sometimes. It's just you and your charts a lot of times. So utilizing the community is, again, another reason that we created it for, right? So and when it comes to the Telegram, we have that team chat Telegram, right? You can type a question in there and see if anybody responds regarding accountability partners, and you can go from there. Yeah.
It's powerful, man. So important.
For the Telegram, you would have received the initial email shortly after you enrolled with us regarding accessing the Telegram. So I go back and check your emails and check your spam folder to look for that email that would have gave you the initial access to the Telegram channel. And then once you get in there, and I'll repost this, I haven't posted in a while, I'll repost it in the Telegram channel, how to access the team chat channel from there. But yeah, check your emails for that Telegram email.
Sure. Good stuff, man. Good stuff. Powerful messages.
Cassandra asked, can you take a look at your smart trader? Hold on, let me see. I just want
the settings on the Ichimoku on the cloud.
Yes,
Yeah.
I just wanted to take a quick mobile pic of it for.
Oh yeah, for sure. Gotcha. Look at this 80-20. Right? We wonder all the time, like, oh, where do I take it? Right? Look at your crossover and your swing. Right. So yeah, let me pull this up. So of course you have, your default, and then this one I did, and I actually changed up the colors from time to time. Like I thickened the lines for the sake of the people being able to see it. You may not necessarily want that, maybe on your charts, or maybe make it look too cluttered. So by default, your lines are usually like your tingus and your keys, and they're usually like 1 on the font, 1. But I bumped them up to 2, and then I just made these just solid colors. And then you can enhance the opacity, right? Or pull it, decrease it or increase it on your clouds. And I think that's it. Yeah, because I don't mess with this. And I'll never mess with the numbers, on the indicators. I leave it as is, and that's it right there.
Got it. Thank you.
You're welcome. You're welcome. So that's it. I mean, I think feedback. Anybody, did this help anybody? I know before somebody actually helped me on it. I was confused on this cloud stuff.
Yes, because I had it loaded on my MetaTrader 4 on my iPad for the longest. And I just did it just to identify whether price was trending up or trending down. That's what the basics that I knew it was for. But I'm like, what's these lines for? So I do appreciate you taking out the time and teaching us.
Awesome. Appreciate you being here for sure. Yeah. Watch it again. Yeah. It'll definitely be available. Appreciate the feedback, everybody. Definitely be available in your back office. Watch as much as you have to. You may have more questions. Ask them on the sessions during the week. Post them. Your questions on Facebook, post them in the Facebook. It's just, a lot of times, because it's everybody uses Facebook. Sometimes it's just easier to post, in the group. That's fine. In the Facebook group, that's okay. Yeah, that's it. So like this is the NZD USD, right? That drive up. You know, it's just pushing up right now. It's just like at a glance, you can just see like, okay, I need to wait on some things to happen. I need to wait on some things to happen. Okay. So like on your 15, look at that. That sideways move, that's when it flattens out. You know, you get that cloud flatten out and it'll bounce back and forth, right? Because it likes for price to trend. You know, but if you put your cloud on there, and I put the default one on. All right, you can see how that's just bouncing. It's got to give you something more definite, right? So you definitely get some falsies at times, but this is flat. That's why. So you want that push down, right? For this to turn bearish, and that push down for that to start making this move, start coming through some levels. All right. See, but you can see here how this got caught. So that reversal, see how that bounce, how it didn't make it, didn't make it through there. It saved you sometimes. How that just held, just wasn't time. Just wasn't time. Okay. Any other questions before we wrap this session up?
Real quick, Yali, no, they don't. We teach the methodology the way that we do, and we post the trade ideas in the Telegram channel. And that's the reason that we strongly suggest everybody goes through the training, either shows up to the live sessions or watches the recording, so that you can understand the methodology and you can decide how you enter the trade and where you take profit on the trade and what your trade management looks like. So no, we don't give you signals, right? We give you trade ideas based on the methodology that we teach, and you as a trader, as you develop your trading plan, right? You enter the trade based on your trading rules. So it's extremely important that you go through the training in the back office and you show up to the live sessions or watch the recording so that you understand the methodology that we teach and why we teach it the way that we do, so that when we do post those, you understand why we posted it, what it looks like, and based on your rules, you can enter it based on your confirmations that are built in.
Okay. So you could see a post like this come through, right? And traders that's been with us for a while know that we got a very shallow retracement here. It hit this 80-20 zone, right? So it might have come through originally like this before any of this price action existed. Hey, we've got an 80-20 zone here, 118, 127. We haven't had a 382 pullback. There's a possibility for a correction, which it did, but then it bounced, right? Just wasn't ready yet. But now we're sitting up here around this head and shoulders type of scenario in the zone. So you'll get that, and then you'll use your own analysis and decide what you want to do, right? Some people in our group, I know, they don't take the majority of the stuff we send out. They might take one or two of them that fits their criteria that they want to take a shot on, right? That's the only way you become independently profitable and consistent. Become your own trader. So it's a great question. Anything else?
Become your own trader, right? We don't want you guys to have to depend on us or anybody else to tell you when to enter and when to exit the trade. Just like you won't depend on anybody to tell you what store to go buy your groceries at or to manage your money for you without you understanding where that money is going.
You don't
right?
trust them
We
anyway
want you
when
to
it
be
happens.
able, yeah. We want you to be able to manage your money yourself. We want you to be able to manage that yourself and understand why you do it. Independently, consistently profitable traders, not dependent on somebody else and their thought process, which if they're just giving you signals, you don't understand their thinking anyway, right? So that's all I got, bro.
That's it.
That's all I got, man.
Awesome. We got a hand raised. Kim.
Just one other thing. I just checked all of my email and my spam. I didn't realize my spam was on auto delete and it might have deleted it. Is it possible that I can
yeah,
get
probably.
another email
Yeah.
with the Telegram?
Can you send me an email to the Forex Trade Room at gmail.com, please?
Okay.
Yep. And just say, just note it because I'm not sure. Yeah, Kate's still on too. So yeah, just say looking to get access to the Telegram. Looks like my emails were deleted. Just so a reminder for us, and
Okay.
I get that sent out to you.
Okay, thank you.
You're welcome.
All right, Casey, give you the last words before we wrap things up.
Oh, I don't have much to say about the cloud, but if it works for you, it works for you. And if you add it to your toolkit and makes your game better and stronger, then absolutely utilize it. So, but I enjoyed watching today. I try to understand what y'all do with these indicators. It just doesn't click for me. It hasn't. So, but I appreciate it.
You're very welcome. You're very welcome. So that's it. Hey, the video is it's already there in your back office. It's recording live. So go back, watch it as many times as you have to. As we navigate and go through our charts this weekend, we'll definitely post. If there's anything out there that we're seeing, we're gonna post it in the Telegram group. Okay. So everybody enjoy the rest of your weekend. Thank you so much for hanging in there with us today. I know it wasn't our typical session, but we wanted to make sure that we talked about the Ichimoku cloud. So hopefully everybody learned a lot. Have a great weekend, everybody.